Great to have you guys here. Maybe we'll just get started with some quick intros. We were on a panel together last year. Noah Buchman, co-founder, chief revenue officer, president of Propel.
You got it.
Maybe tell us a little bit about Propel. What do you guys do?
For sure. Good morning, and good to see you and be on a panel with you again. Guess we did a good job last time around. So good morning, everybody. As Kris mentioned, Noah Buchman. Propel is a publicly traded Canadian fintech that facilitates access to credit for the underserved consumer. We have an AI-powered technology platform that really marriages the best between finance and technology. And we have operations in the US, Canada, and about to launch soon in the UK. We're deeply focused and committed to credit inclusion, and the business is about building a new world of financial opportunity. And happy to be here.
The Canadian fintech success story.
Appreciate that. Great team. Some in the audience here as well.
All right.
Great group.
Great stuff. Michael Fox, Chief Risk Officer, KOHO Financial. Tell us about yourself, and what is this company KOHO that I hear so much about?
I'm glad you've been hearing about KOHO, Kris. So KOHO's a banking challenger, really on a mission to drive financial inclusion, drive access to financial services. So we're very mission aligned there. Personally, I've been at KOHO for almost 7 years now, and we've been catching on with Canadians. Our goal is to be the next big bank ultimately in Canada, but really while leveling that financial playing field.
Awesome. And we worked together previously at KOHO. I'm Kris Hansen. I'm the CTO at Sagard. Sagard is an asset manager. I'm told that's like a hedge fund, but with more regulations. And I've got a sheet here of all the things I can't talk about now that I'm SEC regulated. But through our venture arm, full disclosure, we're also investors through Portage in KOHO Financial. And I was previously the CTO working closely with Michael at KOHO, where one year he actually dressed up as me at the Halloween party, if I recall correctly, Michael.
I won that Halloween contest, to be clear.
Nice work. The two of you, so Propel and KOHO announced about a month ago some type of partnership. Maybe tell us a little bit about that partnership. What is it that you did, and what was the strategic objective of doing a partnership together?
Go ahead.
So KOHO has been increasingly providing lending products to consumers. Part of our mission there, we're building credit up and getting into loans. We want to be that full destination credit platform. As we moved into higher dollar lending, we decided at this time we needed a partner, and we went out and looked for partners, talked to a bunch of partners, and Propel had a great track record in the marketplace, and it was just a really strong fit for us. So also, we aligned on launching our high-dollar lending product together to give us that full suite of financial products.
Yeah, in essence, what it is an embedded lending program for KOHO members. And our core competency is in unsecured consumer lending, purely online. And this is exactly what KOHO is seeking. That's our area of expertise, our core competency. They have the distribution of a phenomenal number of members in Canada, and our missions are aligned. So what we have done is we have embedded our entire infrastructure, which is that end-to-end system for online consumer lending, inside the KOHO app, so KOHO members can access our Canadian brand Fora, the line of credit.
Got it. So KOHO members log in. They get offered services, basically lending capabilities through you. Why this customer segment? What makes this attractive? What's interesting for both of you to do this type of partnership?
Sure. Going back on all the partnerships that we have, and we have a number of them, mainly in the US, and we have a direct portfolio in Canada, now a partnership with KOHO, is mission alignment. And KOHO is also very focused on the underserved consumer. So off the top, we're looking for partners that we can further our mission that have the same areas of focus. We know what we do well, which is everything for A to Z in online consumer lending. It's the marketing, it's the risk and response models on the underwriting side, it's the use of alternative data, it's the technology, it's the servicing, it's the product analytics and the technology. KOHO is very focused on that, and they have a phenomenal infrastructure as well. They have members that have been historically also through our direct channels received Fora loans, and it's an area for a full suite of digital banking products that they're looking after. So when you have a mission-aligned company, you have the distribution. That was very attractive to us. They wanted to get into higher dollar lending above their cover product and others and credit building. That's exactly what we do. It's a perfect partnership.
We have a credit building product that has phenomenal uptake at KOHO. People just really like it, and it works for building credit. But we need to be that full life cycle for credit. These people are building credit for a reason. So in terms of thinking about those next products, we could have done a long infrastructure build, very time consuming. We could go to lenders to provide the capital and say, we need a few $100 million to borrow money, and we don't have any portfolio performance. But trust me, we're really good at this. Or we could partner with someone and have a mutually beneficial relationship, and that's what we've decided to do.
Got it. Yeah. So, and it sounds like it's part of KOHO's goal to go further into more financial services. I think there's a lot of bankers in the room. A lot of people know that deposits don't necessarily make a lot of revenue for the organization, but there might be some money in lending, right? So is that part of the ambition as well?
Ultimately, we're going to be full service in the lending space. We will get into things like auto loans, and so if anyone's an auto lender in the room and you want to talk, let's talk. We will get into things like mortgage partnerships, maybe even student loans, and it's all about what do Canadians need.
Nice. Let's talk a little bit about like division of responsibilities here. So it sounds like at KOHO, what you're doing is like acquiring the consumer, attracting them. You've already got a fair number of customers, as I understand it. And then at Propel, like, are you underwriting? Are you adjudicating? Are you balance sheet? Just take us through the stack a little bit.
Sure, and this goes right at the heart of what an embedded lending partnership is. So inside the Fora app, and later if we ever get into regulatory on the identification of who the lender is, you have KOHO's branding, and you have it featured inside the KOHO app. But what it says under KOHO, it says line of credit powered by Fora. And Fora is our Canadian brand, and that's critically important in the embedded lending partnership. So the distribution, the members, the customers it's featured to, that is KOHO's responsibility. This is their lending product for their members. The powering of the product, the infrastructure, the risk, the balance sheet, the technology, the servicing, that's done on the Propel side under our Fora brand.
Yeah, that tracks. We've got increasingly strong at acquiring customers, and we're getting more and more new people signing up to KOHO every month. And so we do the KYC, we do a lot of the fraud controls, we do the customer service, but there's a nice, I'll say clean break on the underwriting, although we are helping in some degree. And
it's a partnership.
And I think there's some redundancy on fraud controls that's really helpful, where we can catch some fraud, but also there's like a second line of defense there.
What's advantageous within an embedded lending partnership is that KOHO has a tremendous amount of data on their consumers as well, right? Michael mentioned a few things, not just KYC, but they have other habits of deposits, cash flow related. Why an embedded lending partnership can be superior to doing it direct is blind spots. If we're acquiring a customer through Google Ads or through another affiliate partnership, we don't have the same type of insight as we can in a connection, typically through API or other stuff that KOHO can provide. So what that actually ultimately does, it allows more consumers to qualify for credit. And if your focus, which is a mutual focus on credit inclusion, using the data that KOHO has on their members, or any partner in an embedded lending partnership has, and feeding that into our models makes them richer. It removes some of the blind spots, and ultimately more people will be included for a credit product.
Great.
If you look at traditional underwriting models, around the score cutoffs that a lot of financial institutions use, the consumers that are in that band, 90% of them are still good. And so what we're doing at KOHO is using all the data we can on them, whether it's deposits or how they're using our app. And every time we can use another data point to underwrite, it allows us to provide that access to financial products to another population that couldn't get it before or can't get it elsewhere.
The key is not avoiding the risk, but assessing the risk, pricing the risk, and making the right call. And you decided to partner versus building your own, because typically KOHO builds things, doesn't generally partner. So how did you decide kind of just not to just build it here?
Yeah, it was a few things in this case. There's the balance sheet thing that I talked about, where Propel just has an existing relationship there. It's an enormous work stream to raise funds to lend. I think we could have built a solid system for decisioning here, but we signed this deal and launched it in 3 months. We could not have done that ourselves, which is a testament to the partners moving quickly. We could not have built that quickly ourselves. So it allows us to do that with velocity. Maybe 5 years from now or a few years from now, we'll add other things, but right now it just made a lot of sense with the speed that we want to move it.
So let me get that right. So 3 months from the very first, like, hey, I think we should do this, to being in market.
There were a couple conversations before we signed the deal.
Speaking before for signing the deal,
Okay.
but after we signed the deal, because we have built our business on partnerships, and I'm going to tie that back to the question of the partner versus build, we now have a very well-oiled internal machine for onboarding new partnerships, whether it's banks, we have 4 of them and counting in the US, or partnerships like the embedded one we have with KOHO. We actually do have an embedded partnership with a white label solution with a bank in the US as well, structured slightly different. But ultimately, why the partnership works is, do you partner or do you build? We wouldn't be in a position to partner if we didn't build first and be successful in the Fora brand in Canada. So when we launched about 24 months ago in Canada, we've now built up very strong performance. We've started to build up scale. We had the data, we had the performance, we have the profitable track record. We wouldn't be able to enter into a partnership with a KOHO or anybody else if we didn't have that. So in our case, we had to build first before partnership. In KOHO's case, something wanted to enter, they had to partner first before build. And that's why it works so well.
I love that velocity, though. Like, I know a lot of organizations would take 3 months just to book the meeting to talk about maybe going in this space, right? So 3 months, velocity matters. Let's talk a little bit about risk and compliance. I've heard that's important. So as you get into this business, as you start to think about embedded lending, as you start to think about different industries, how are you approaching risk management? What was different on the KOHO side? What was different on the Propel side? What did you have to think about here from a risk and compliance perspective?
I think there's the core credit risk, but then there's other regulatory risks. So I think it's pretty clear in our arrangement who owns the credit risk, and those incentives are all clear. But I've been in partnerships before where the regulatory risk was confusing and multiple parties perceived regulatory risk. So I think it needed to be very clear who the issuer was, who has obligations with FinTrack, OSFI, consumer protection, and so on. And so we're very careful to delineate that, identify that, and chase it down rather than take it for granted or leave it as unknown.
Yeah, ultimately the greatest part on the regulatory side, depending if it's a fintech to fintech partnership like we have with them in Canada, or if it's a bank fintech partnership like we have of various structures in the US, it's who is the true lender. And it's paramount that it's clear to the customer who the lender is. In the US, for our partnerships, it's the banks. Here in Canada, we have the provincial licenses to act as the direct lender. And when we go through the process, and the co-branding aspect is an interesting exercise to develop, it's for the KOHO members, it's their product, but it has to clearly state who the actual lender is, and you can't run afoul of that or ensure that the customer could be confused in thinking it's potentially a KOHO loan issued by KOHO, when in fact it has to be who the lender of record is, which is in our case, Fora.
Yeah, that sounds quite key. Important to get it right as well. And then when it comes to like servicing and so forth, who handles the servicing in the partnership? Is it KOHO that's handling that, or is it?
No. Going back to our suite of offerings that we provide to other fintechs, other companies, and banks, we do the servicing as well. That starts after the customer. Again, KOHO, it's their members. They have responsibility. So in any embedded lending partnership, whomever, even in the bank stuff, it's their customers. They have that at the beginning. Moving through the application process, the origination side, the servicing, people miss payments on the recovery side, that's a core area that we do here in Toronto. We handle that part.
That is, if you're looking at partnerships like this, that is a core consideration. Probably one of the most frequent questions that we got on our side when doing this is what kind of voice and attitude is Propel going to bring to collections? And we needed to make sure that we were aligned with how we collect, what kind of tone we use, how frequent, and you need to make sure culturally you're on the same page with that, because whether it's Propel or not, there's still also KOHO customers, and there could be brand backlash if you don't get it right.
100%. The two areas when starting an embedded lending partnership to focus on are branding and the vision. You have to be aligned on the both, because as mentioned, we have KOHO's branding in here, but we also have to protect our Fora brand and how we operate and our voice to the customer and how we treat the customers. So a lot of the heavy lifting before actually signing the deal and getting down to code for all the integrations, which was the 90 days that you alluded to, we had to ensure that we were both aligned for what that brand voice would be, how we would be treating the customers. Do we have a track record that matches how KOHO would want their members interacted with? And then secondly, what is the vision between the two? How does KOHO view an embedded lending partnership for consumer lending? How do we operate for online consumer lending as well? And those two visions have to be aligned with the branding.
That seems really critical, and I think we're going to jump into that a little bit around partnership dynamics. Let's talk a little bit about technology, one of my favorite subjects. There's a lot of ways to do embedded financial services these days. There's APIs, there's banking as a service partnerships, there's a lot of different sort of technical integration approaches you can take. What's the approach here? What are you seeing in general as a theme in the integration side of embedded?
So specifically here, which is a piece of what we do under the umbrella of Propel, you'll have the API type of integration. If you look at the company further for other types of partnerships, you mentioned banking as a service. Our tentacle of that we have in the US is lending as a service, an arm of it, because that's the core area that we exclusively focus on. We have white labeled solutions, we have embedded, we have co-branding, and all of those are different structures that ultimately will meet the need that we have as a business for credit inclusion. So we're not picky necessarily on saying we only do this type of integration. It's what's best to meet the objective to ensure in a market that we're not serving or want to continue to expand in, that we'll stay true to our mission and have a partnership based on credit inclusion. In the KOHO part, they have a tremendous amount of information and data on their consumer, something we were alluding to a few minutes ago. So those APIs between us will make the risk and response models richer. And again, as mentioned earlier, more inclusive, which is the objective of KOHO. They want as many members as possible to be included with the right consumer credit product as well. So API in this case, but it's partnership dependent to meet the objective.
I think it has to be appropriate for the product. We've got a multi-phase journey that we're going to be increasingly integrated here. But when we do a mortgage offering, it might be a broker model. It might just be a link. And I think when you're deciding to do these things, it just needs to be appropriate to the kind of relationship and the ongoing loan relationship where there's money flowing back and forth.
Makes a lot of sense. Let's get a little bit into the partnership dynamics. You mentioned that aligning on vision is important. How do you check the chemistry for something like that? Like, is there like a dating phase that you sort of go through?
Cultural dynamics are so important with these partnerships. You need to get along. You need to be able to talk to each other. You need to be able to talk about problems and talk through them. You need strong relationship people. I think shout out to Matt there, who's probably better people skills than me and Noah. And I think you need to be aligned on risk tolerance and the kind of risks that you're willing to take. And one of the most important things that I've lived through great examples of this and not so great examples of this is velocity. So there's that implicit question. If you say you're going to follow up on something after a meeting, in your head, when does that follow-up happen? And I think in this case, we were looking for something that was more like today, not like next week or next month, and that's you got to make sure you're aligned on that.
Yeah, and going back to the roadmap in the game plan, that it's understood well in advance on both sides, and there's going to be bumps in the road. But as we often kind of say back at the office, if you're not going fast enough, you don't feel the bumps in the road, you probably aren't going fast enough. And the programs want to scale, but sometimes you have to take a step back, and you have to ensure that you don't go necessarily 100 miles an hour, even though a partner may want it today, and you actually review, plan, and then you execute on a gradual type of rollout. In our case, we have phases between us. So it's agreeing on what that looks like from the start, and ensure that your vision for the product, as I was alluding to earlier, are fully aligned. And that comes through that dating phase, as you asked at the beginning. So we definitely spent a lot of time and brought in more people of the teams. You have your core leaders on each side, on the relationship management side, but the people actually working on different elements on the day-to-day and ensuring that there's a free flow of data, free flow of communication between the two, so that everybody understands each part of it and there's no blind spots to any of the partners, because it is a type of marriage.
So I like that. So you do a launch, you launch in phases, you have agreed upon kind of metrics and measurements and ways of assessing your progress, and then you discuss it along the way, and do you adapt and adjust, or how does that work?
Absolutely. You stick to your core plan, but sometimes plans need to be adjusted. If things are going exceptionally well, like you expect them to be, and it's a little bit earlier, and you have the capacity in order to continue to increase at different pace, you'll adjust. A lot of it's just like in sports. It's reading and reacting to the situation, like most things in life as well. It doesn't have to always stick to a hard roadmap, but you need that in order to guide you for staying within the lanes as well. And that's where the trust in each other, the partnership, the relationship element between two groups in an embedded lending partnership is absolutely critical. And you have that conversation together, and you make those decisions together. If KOHO wants to expedite the process and get to the next phase sooner, we have a conversation, or vice versa. If we're in a position we want to do it, we'll have a conversation with KOHO, and it depends if they're aligned, or if not, we adjust, and we have our guidelines, we have our plans, and we read and react within it, and that's what a blossoming partnership does. And both sides are flexible, and why you need cultural alignment.
Yeah, it's tough to get past legaling stuff when you're dealing with large companies, but I'll just echo the trust thing being important. Both parties need to be okay with making mistakes and fixing stuff together and things not being perfect right off the bat. And if there's that trust there, you're going to be able to do that and just feel comfortable working together and move forward.
Is there a risk that a partnership like this becomes too successful? Like I think everybody thinks about the downside risks of, well, what if nobody takes it, or what if we get a high loss ratio? But sometimes we don't think about the upside risk. Well, what if everybody takes it? What if it flies off the shelves?
I mean, that's the objective. That's what we look for. That's our vision in our partnerships, is for them to be, and we're very, very picky on who we work with. So we have a high degree of confidence that the partnership is days old, that it will get to that. But that's okay, and that's part of the adjustment. We have core competencies that suit KOHO. If KOHO, again, the focus at the beginning is just on this unsecured consumer lending product, $1,000 to $15,000. But there are other areas that we have that may be very attractive to KOHO for other parts of their business. But we're still getting to know each other. It's still early. We're confident in our core competencies. That's what we've been doing for 13 and a half years. The track record's there. But KOHO is going to see how we work together for it. And they may, he brought up servicing as an example. This is just a random example. There's not leading in anything. There's been no discussions on anything like that. But there could be other elements that we provide in that full end-to-end suite that may be attractive for KOHO in other areas, and we can decouple other parts of our core competencies to support KOHO's growth as well.
Yeah, I love that. So you're ready to scale the balance sheet, and you're ready to add more capabilities as KOHO kind of leans into the
Absolutely.
lending world. And then, just on your side, Michael, when KOHO, sort of that voice to the customer is essential, that, kind of messaging, how do you scale that, right? So as you kind of scale the lending space, how do you make sure that your voice to the customer is consistent and true? And, as you're kind of working with a partner, scales up with you?
I think it's important to measure the heck out of these things, measure every interaction, how your customers feel about it. Was that a positive interaction? Did we get back to you fast enough? And you need to have that detection in place and react quickly. And again, if you have that dynamic where you can have those conversations out front, you just flag it out candidly and you just course correct. So as long as you solve for that culture up front, I think the other stuff becomes easy.
Yeah, I love that. Let's talk a little bit about the future. So, as you look out 3 to 5 years, from each of your chairs, what do you see coming in the world of embedded lending? Where's this going? Maybe both from a partnership perspective, what's the potential here, but then also just what are you seeing in the market?
Within market and a type of crystal ball comes down to speed. And if we go back to whether it's API or other, the data, as much data that can flow back and forth, even in advance, and knowing exactly when a consumer may be in market or may want to actually need a credit product, and instantaneous type of targeting, again, using the right type of data for it. So if anybody's in any situation and they have the brand trust with their current company, in this case we'll use KOHO, but it could be any other type of company who wants an embedded lending product or related, is that they will know when to have a pre-approved offer ready for the consumer in-app for them to look at. So they can let them know well in advance, right before they've even made the decision, that they may actually need a credit product, and it can ping them saying, you have a pre-approval for $10,000 for argument's sake from the KOHO line of credit powered by 4, or however it's structured. And that will only happen as we continue to augment and enhance the models between us, and we share as much data between us to make those type of instantaneous decisions, rather than in an ITA or seeing a product selection where somebody can say they need an account or need a prepaid card or credit builder or a consumer credit product, whatever it is, it's bringing it forth to them when we know they're about to need it.
I think also the lines between lenders and entities is going to get blurred. Brands will still be important, but I think it's going to be an expansion on this embedded lending where you might be a customer of one financial entity, but you have a multitude of loans with different lenders available to you. There's a lot of regulatory and technology stuff that needs to catch up to enable that, but that's going to happen over the next few years where you're a customer of XYZ bank. But there's just a lot less friction to get a loan that's connected to that with different other FIs.
So more lending in context, more kind of different types of embeds, and people will have many lenders that they work with. Yeah. And what you're saying, Noah, is that before a consumer even knows that they need a loan, already they're presented with an offer kind of in anticipation.
In their app. It could be geo-targeted if they're at a place, if they're shopping, they're using their KOHO app. There's a correlation between the use of other products that'll present it to them right when, right in advance of them needing it, and be approved and accessible to them, embedded again right in the app of their, preferred brand. In this case, KOHO.
Love that. Any last words on what's next before we wrap up?
Just on that point, I think the regulations need to catch up and will catch up. I've talked about, everyone talks about open banking, but also things like portable digital identity and shareable credentials. If you can allow the consumer to take their data and share it with other entities, other FIs, that's going to allow those FIs to make smart underwriting decisions and I think provide more access to credit. And if you leave it up to the consumer, I think it's win-win.
Right on the back of that. Look, regulation is important, and we need regulation. We need the right regulation. We need regulation that is not just good politics but bad policy, but that's good policy and good politics as well. And if you focus on that and you focus on the need and inclusivity in the consumer lending space, the consumer credit space and related, and that doesn't stifle innovation, and there's a lot, the advent of a lot of new developments in technology. Michael touched on open banking. There's a lot of changes that are going on currently with the Canadian government as well. If it stifles innovation and restricts consumers, that's going to prohibit the advancement here of embedded lending or anything else that may be more inclusive, safe, and appropriate for consumers. So a lot of effort should be focused and placed on there.
That's great. Thank you both, Noah, Michael. Thanks for joining me on the panel.
Thank you.